Investors on Bursa Malaysia should expect to see more downside than upside ahead, a global fund manager has cautioned. Teng, the managing director of Capital Dynamics Group, said rising inflation and interest rates in the US are bound to have a negative impact on market sentiments. He said that despite the likelihood of sustained demand for crude oil and crude palm oil, the outlook for Malaysia is less optimistic. Stock markets and currencies in the Asia-Pacific have been taking the brunt of an onslaught of poor sentiment arising from rising inflation in the US. As a result, investors have fled Bursa Malaysia and abandoned the ringgit for safe haven assets such as the greenback. Tan told FMT Business that he expects worse to come.
Earnings are not going to grow, interest rate is not going to go down, inflation rate is not going to go down.
He also likened the current political situation in the country to a quicksand. Nonetheless, he chose to stay positive.
Hope we can get some good concrete foundation for our national politics.
However, Tan advised retail investors to be patient.
Don't look at the stock prices, don't look at the index, maybe for the next 2 years. Don't look at sectors because every sector will go through the ups and downs. Look at more the business model of whatever the company you're looking at.
Citing the case of the glove manufacturing industry, he said many had lost money buying these stocks at a high price during the COVID-19 pandemic.
All the glove stocks are overvalued. The glove industry is a commodity business. It's like palm oil, it's like crude oil. You can only make good money when there's a shortage.
Tan explained that in the case of crude oil and palm oil, data on demand and supply is transparent, but not so in the case of gloves.